Malaysia is close to sealing a deal with China to revive the ECRL project, says Sinchu Daily. Quoting a party involved in the negotiations, Sinchu reports that Tun Daim Zainuddin has arrived in Beijing to iron out the final details of the agreement with Chinese authorities. He is expected to hold a press conference to announce the outcome of the talks. The Chinese Daily says the venue and date for the signing ceremony will be confirmed upon the conclusion of the talks, and that a representative from the AG's chambers is expected to represent Malaysia in signing the agreement. Previously, Sinchu had reported that the cost of the ECRL has been slashed to 39 billion ringgit to 46 billion ringgit, compared with 60 billion ringgit currently. The Armed Forces Fund Board says its actual profit in FY17 was almost half the reported figure due to unrecognised impairments and wrongly booked proceeds. CEO Nik Amlizan Mohamad says the actual figure stands at 370.56 million ringgit and not 662.7 million ringgit as previously reported. This caused LTAT's retained earnings to drop drastically from 259.99 million ringgit previously to accumulated losses of 31.6 million ringgit. Citing the National Audit Department's qualified opinion, she explains this is because, firstly, there were unrecognised impairments of 88.9 million ringgit from two of the fund's investments. They are Dayang Enterprise Holdings and Sapura Energy, whose shares have seen a significant or prolonged decline in fair value below the initial purchase cost. Secondly, LTAT recognised proceeds of 202.71 million ringgit from the sale of land located in Cochrane and Bukit Jalil. However, the profits should not have been recorded in its financial statements, as the terms of the transaction were not completed in 2017. Nik Amlizan says the findings will have a significant impact on LTAT's FY18 accounts. She expects to announce its financial statements by July. Khazana National saw its shares tumble as much as 6% to 11 ringgit 80 cent earlier today, after it was reported that major shareholder Khazana National had offered to sell TNB shares under a share placement to raise 1.05 billion ringgit. Citing terms for the deal, Bloomberg reported that Khazana is selling 85 million shares at 12 ringgit 33 cent each, a 2% discount to the last closing price of 12 ringgit 58. At 5 p.m, TNB's shares settled at a 3-year low of 12 ringgit 6 cent for a market capitalisation of 68.6 billion ringgit, quite a ways down from its record high of 16 ringgit 12 cent on May 4th last year. On Monday, M Investment Bank had lowered its fair value for TNB shares to 13 ringgit 50 cent from 14 ringgit 55 previously. This was after it revised TNB's terminal growth rate from 2.5% previously to 2% to account for subdued long-term growth prospects. The research house kept its whole call on the counter, saying although there is a possibility that Putrajaya's energy reforms may not affect TNB significantly, it prefers to be cautious until the proposals are announced. The former chairman of the Felda Group, Tan Sri Muhammad Isa Abdul Samad, will go on trial on October 7th for taking a 3.09 million ringgit bribe to push through the purchase of a hotel in Kuching at an inflated price, and doing so without the approval of Felda's board of directors. During his tenure, Felda's investment arm FIC had acquired the Merdeka Palace Hotel and Suites for 160 million ringgit. The property was valued at 110 million at the time of the deal. He is now facing 10 charges of CBT and corruption. The KL High Court has fixed 13 days for the trial. The prosecution will be calling in 30 witnesses. Meanwhile, in response to the claim that the group had been cheated in its purchase of Eagle High Plantations, Muhammad Isa reasoned that the purchase was justified. He says Felda did so after failing to acquire land in Papua New Guinea in its bid to grow its land bank. He adds that the idea behind the Eagle High purchase was to enable Malaysia and Indonesia to control the production of palm oil. Cahaya Mata Sarawak is confident of holding on to its road maintenance concessions in Sarawak, which end in June 2019. Group Chief Executive Officer Corporate, Dato' Isaac Lugon says the company has been undertaking general construction and maintenance activities for 6,260 kilometres of roads and that getting the extension isn't a concern. Lugon adds the company is looking forward to securing more state road concessions, which can stretch to about 30,000 kilometres. Meanwhile, Lugon denied that the Sarawak-based firm is closely linked to former Sarawak CM and current Governor Tun Abdul Taib Mahmud and his family. He points out that the EPF, Sarawak Economic Development Corp and Lembaga Tabung Haji's shares in CMS are more substantial and cumulatively stand at 26.63%, while foreign holdings are at 15% as compared with Taib's shareholding. CMS's share price dropped significantly to RM2.16 on May 25, 2018 after G14, before slowly recovering. The counter ended trading at RM3.68 today.